Hey, what's up, guys? Sam here, and I'll be doing the free video for Friday, August 18th, 2023. So this video is going to be a little bit of a continuation of one that we put on the YouTube maybe 2 weeks ago. It was called "How's It Going to End?" So I think we'll title this one "How's It Going to End Part 2." Very clever. And I would just suggest, if you didn't catch the first one, I'll include a link in the description below for the first one. You can check that out. I'll cover it maybe in a little bit more detail there, but I just kind of want to show you a follow-up, right? Because it's been 2 weeks since we put that video out, and a lot of folks watched it, and I just kind of want to show you what's happened here in the last 2 weeks, and how it's all progressed, and how I think it will continue to progress, barring some major change that we'll certainly cover in one of these videos if we see that. But there's plenty of major warning signs out there that I think you need to be aware of, and I'm just going to kind of add on to the video with this video here in terms of what we're seeing. So let's start here with SPY, and I'm going to go ultra long term with you guys. I'll just kind of give you a shortcut in terms of what we covered with the premium video in the gold room today. So we looked at everything, and a lot of things are at critical support levels. IWM is at a critical support level. SPY and QQQ are actually didn't quite make their respective support levels. QQQ, I believe, is 350. SPY, I believe, is 432 to 430, and I don't think you quite got those levels, but something like the IWM, it did pull back to its daily 200, which was also yearly VWAP. So it has to hold today's low on IWM. Below there, it becomes a problem. Below any of the lows, actually, on any of the indices, below today's low, it becomes a problem on a closing basis. And then we looked at things, for those of you that like bonds and whatnot, we also looked at things like LQD, which is investment grade bonds. And those are actually sitting on their respective support level that needs to hold. Below there, it gets a little bit sketchy, and there's a giant air pocket below. So two things that you can follow next. I'll give you three. The third one is going to be the dollar. So the dollar closed right at a trend line as well as a daily 200 resistance level. The trend line you can take or leave it, but the daily 200 I think is pretty important. If the dollar breaks above that next week, you're going to have some problems in the equities market, and then the IWM below the daily 200 and LQD below today's low. So you can follow those three products, and if you understand what I just put down on those three, it basically covers your basis for no matter what you're trading, whether it be Tesla or what's the opposite of Tesla? Let's say Walmart. Right? So it doesn't really matter what you're trading. If you happen to see those three things trigger to the downside, more selling to come. If you happen to see those things not trigger and you see the dollar fail at its daily 200, at least initially, you'll get a bounce. I believe any bounces, I'm just going to put all my cards on the table here for the short-term stuff so we don't have to look at it. I believe in the short term, if you happen to get a bounce here, and this would be the spot for it starting next week, it is going to be a sell the bounce kind of situation. So be looking to sell the bounce here because most things are pretty broken, at least based on the way that I interpret it. So let's dive in here, and we'll cover some major signals that have developed from the last video. So here we have a quarterly, and here we have a monthly. Well, we'll spend most of our time on the monthly, frankly, but I thought a quarterly would help. So with the charts here, the charts, this is the SPY. This is what we talked about last video, right? You made a gigantic price high, almost a double from these previous highs here, and this previous high of momentum. You almost double it in price, way up. Why is the indicator going down? Right? Now you actually have a monthly squeeze. And you see how now that you understand that the divergence is there, let me kind of return the indicator to what it should look like. You see how the green line here is actually below the red? That is not a great situation, right? Because keep in mind, what got you out of this was money printing. What got you out of this was the most money printing we have ever seen as a human species ever. What's going to get you out of this? Well, now you have that. Now you have inflation and no political will from the Fed to print money. And the answer is I don't know. But at least for now, you do still have thrust higher, but this is a very sketchy situation because the green line is below the red and you have this huge negative divergence as well. And this is very important. This will come into play here with the next couple of stocks that I'm going to show you. You see how this candle closed near the highs? And then this candle completely erases all of it. So now if you kind of look at it like that, it's creating a little bit of a trap there, right? A little bit of a bull trap. Bull trap is when you have a resistance level, right? Resistance goes above it and then comes back below the resistance level. That creates kind of a Wyckoff thrust, bull trap, whatever you want to call it. Everyone who bought above the resistance level gets trapped and then they get flushed. So that's SPY. The same thing is on the Q, so I won't bother showing it to you there, but I do want to kind of speed things up a little bit because I did intend for this to be a fast video, and here I am yapping your ear off for 7 minutes on a Friday. So then let's take a look at two things that really matter here, and these stocks are probably two that you have heard of. The first one is going to be Apple. The second one is going to be Microsoft. Actually, you know what? Let's dump the quarterly. I'm not even using it. So with Apple here, ask yourself, where's your resistance level? I would say that probably is a good resistance level. Pulls back. So that's our point of reference. We take that level, we stretch it across. Let's do this in a more articulate way. So that's your resistance level, right? So what did we just say is not allowed to happen? You're not allowed to break the resistance level and then come back in range below the resistance level, which is where it is currently, right? Now, if you look at Apple here, why does Apple have a negative divergence into this new price high? So it's a combination of two things, guys, that really will be very important. And it may, I don't know how important it seems, on the surface, but it's really, really important. Price goes up, indicator down, divergence combined with structural break, Wyckoff thrust, bull trap, whatever you want to call this. So that's a major issue, right? And Apple being the biggest stock in the world is somewhat important. And then if we look at it on Microsoft, one of the prettiest trends you'll ever see. So same process, right? Exact same process. One, do we have the divergence? We do by a little bit. Price made a higher high here than here. Why is the indicator down so much? Point one. Point two, draw it across. Here's your previous resistance level. Let's call it 350. You see how you poke above and then you close back below? And you're doing so with the indicator red on top of green, where it has not been that way for the last 7 years, right? So keep in mind that I'm showing you this with the intention that you either A, saw the first video that I posted, which I'll again link in the description below, or B, that you will see it. Watch that one. Well, I've been telling you to watch that one first after you've already gotten through basically all of this one. Go back and watch that one, and then put the two videos together, and it'll make sense as a full picture. So what are we trying to say here? Well, what I'm trying to say here is that the signal that I showed you in the video from 2 weeks ago titled "How is it going to end?" that signal actually hasn't even fully triggered yet. We've only seen the tiniest little twitch in that signal, and look at the structural damage that some of these charts have already taken on. What do you think will happen when that signal that I show you in that video actually plays out in full earnest, as time progresses? If just a little twitch in that signal results in a massive pullback in everything, if the signal fully triggers, which again I cover in the video, that is not going to be great. And so in this video I wanted to show you just, the SPX because of the negative divergence, but then also the two most important and biggest stocks in the world, which are Apple and Microsoft, because they also exhibit these issues, and on top of the negative divergence, they have that bull trap dynamic. So putting it all together, guys, next week they kind of have to bounce or die, based on all the levels that are important in the index. They kind of have to bounce or die. But I believe that if you get a bounce, if you're lucky enough to get a bounce, it is going to be a short. As if you can get it anywhere as close as possible to 4,500 on SPX, it's a short, in my opinion. And you look to take it down to about 4,300 minimum, but even then, I actually don't think that holds. So I do think that you'll get a bounce at 4,300, but then once 4,300 breaks, then the floodgates will open. So near term, what I would like to see is a bounce. Back to 4,500, short the bounce to 4,300, cover it at 4,300, play it back to 4,400, short again, and then let the levy break. So all of this was helpful, guys. Before you go somewhere else on YouTube, if you found it helpful, if you found the first video helpful, if we got you ready for the pullback, if you weren't screaming bullish because you watched my video 2 weeks ago and I at least scared you sufficiently enough to take care of yourself and your money by hedging or buying puts or just trimming longs, leave us a like, leave us a comment. It helps us with the algorithm. And have a great Friday, guys. We'll catch you back here again next Friday. Cheers. Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.